Hello guys, I'm gonna make this video as fast as I can and as easy to understand as I can. So basically this is a weekly chart on SPY, and we're looking at SPY because SPY basically tell us the entire situation on the market. Now, on the weekly chart we already have a reversal here. And you can see here these lines over here, the blue lines, the orange lines, the green lines, that's what we call the standard deviation channel. Now how you trade the standard deviation channel is that you buy when we are close to the bottom of the orange area or more, and we sell when we are close to the blue area or more. Now on the weekly chart, we already have a rejection here. It was on 27th of October, and the downtrend already started. And as you can see, that the two lines, the green line and the red line, which is the trend lines, trends in the direction where we're trading, we broke that trend. So we are basically kind of trading sideways in the downside direction. Now that's on the weekly chart. Now we're gonna zoom out and see the real situation of this. If we go to the Monday chart, we are way up here. We're way overextended. We're way overbought. That usually is not normal. All this movement right here outside, this is not normal. This is way overextended. Now, every time something happens that is way overextended like this, we're going to have a similar reaction. So we're going to go down, and very possibly we're going to have a very oversold area too. Now let's zoom out even more to the 3-month chart so we can have a very good view of how the market is doing. Now this is when we were down here in 2008, 2009, where the bull run started, 2009. As you can see, we went up and down, blah, 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 all. It's the same thing. The standard deviation channel works the same way, even the daily chart or the monthly chart, and then you trade based on the direction of where the market is going. Because the bigger channel is the ones that keep control the market. Now, as you can see here in the 3-month chart, we're way overextended, so that means we're going down. So I'm guessing around maybe 400, 450 SPY chart, give or take. That's just a guesstimation. And yeah, I mean, anybody that tells you, hey, you know what, just buy, we're in a bull run, la la la, they're lying to you. I mean, you are gonna buy at extremely, expensive prices. Yeah, I mean, if you want to risk a small percentage and gamble it, and just for a quick swing trade, just a quick trade, is fine. But don't hold it, man. I mean, this thing is going down, and I'm not talking only stocks. I mean, Bitcoin already started crashing out. I've been warning people for this for a very long time. Weeks I've been warning people, and about Bitcoin I've been warning it for months, because Bitcoin always does. Bitcoin loves doing this. The double top. The same happened here. 2020 we went up. Oh, amazing, we sell. Oh no, you know what? We're going up again. Yeah, we're gonna have new highs. We're gonna hit 300,000 Bitcoin every time people start claiming we're gonna hit 300,000 on a crazy price like that, we are going down. And that's what happened. And we went down all the way down here to 16,000. I call it around 2030. I mean, 2030 was a fair price. This was gravy. I mean, this was perfect. Of course, if you buy something here and you keep some cash, then you can double down on here and you should be fine. You will make a lot of money. And then, of course, now we're here in January when we peak. When we peak, I told everybody, dude, don't buy more Bitcoin. This thing is going down. It's gonna go up again. I don't know how high, but and then it's going down. Don't hold it. I mean, this thing always does the same double top. As you can see here, now we're going down. We are 91,000, give or take, and this thing is gonna go down at least 55, 60,000 price, and everything lower is gonna be gravy. 40,000 will be gravy, which most likely will happen. Now let's check Now this is U.S. Treasury yield. Basically, this is an indicator that will tell you, basically, it's a recession indicator. Let's call it that way. Now, every time we cross under the zero line is letting you know, hey, you know what, dude, you might need to take a look on the market. Just keep an eye on it. You know, it's like a pre-warning, and then you need to double check that with the other indicators, you know, or check the market, check the monthly charts, you know, if we are overbought or oversold. Just keep an eye on it. Now, when we cross up, when we return, right, because we were moving down here, on the US Treasury yield, and then we cross over the zero line. Now that's danger zone. That's what we call recession area. Now, this is not a buy or sell indicator. It doesn't mean that if you cross up the zero line, it's gonna be, you know, the end of the world. Recession is here. Blah blah blah. No. That's not it. It's telling you, hey, you know what? We're in the danger zone. You gotta keep. You gotta be more careful. You gotta keep a track on the market and double check everything. Right now, usually, how historically works is that a recession will happen after you cross the zero line. It will happen between the 6 and 19 months. It might be way earlier than that. It might be a little later than that. But that's when a recession usually happens. Now, if you go to the daily chart, you can see when we cross over the zero line, which was September 9, 2024, which means, you know what it means? So basically a year, right? November, basically a year, 12 months, so we have 6 more months. Give or take, it might be earlier than that, it might be a little later than that, but something heavy is going to happen. Now, of course, a recession is not a guarantee, but it might be maybe a very strong correction, which, somebody pulled my keyboard. Okay, so if we go back and we check the 3 monthly chart, again, this is letting you know, hey dude, we are way overbought, we're way overextended, we are going down, baby, we're going down, and this thing is not gonna stop. Dude, this thing is gonna crash like hell, and there's a bunch of indicators, there's a bunch of things telling you, not only the market, sentiment of the people, you know, even for example, a very clear indicator that we are on the top is when people that knows nothing about crypto or knows nothing about stocks will start telling you, hey dude, you know what, I see people making money, I want to buy Bitcoin. You know, I don't know what it is, but everybody's making money, I want to buy Bitcoin. That's a very clear sign indicator that we're on the top, because, you know, even people that never touch crypto, they want to buy it, and it's a bad idea to buy it at high prices, right? And we're already going down, man. This spring market, we're at 662, we were at 665, and yeah, we might have a couple of bull traps. We're going up, downward, but hedges and big companies are already selling off everything to retail, and retail is going to be the one holding the big bag of excrement that's going to be on this side. It's going to take some time to recover.